Greetings, my treasure-hunting hamsters chasing golden seeds of knowledge. Today, we're laying all the cards on the table and asking the big question. What really brings more money, investing in the stock market or starting your own business? I've prepared a video that digs into this exact topic. And it's not just vague opinions. It comes with concrete data and clear comparisons that make the picture much sharper. So don't just sit there, grab your notebook, lean in, and let's crack open this timeless debate together. Because the answer might just change the way you play the game. Let's begin.
If you invested $100,000 10 years ago
into two very different money vehicles, one of them being the S&P 500 and the other into buying a laundromat, which would have made you the most money? Let's start with the S&P 500. According to historical returns, across the last 10 years, the S&P averaged about 12.7% per year. Not bad. You more than tripled your money with nearly zero effort. But what if you rolled up your sleeves and bought a laundromat instead? Let's say you put a down payment of $100,000 on buying a laundromat that is worth $300,000. The laundromat is likely already making $100K in revenue and around $50,000 a year in profit. You'd make back your investment in just 2 years. So by year 10, your laundromat has generated $500,000 in net profit. That's over $170,000 more than the S&P 500 investment. And that's just cash flow. If you improved the business by adding card readers, vending machines, wash and fold services, you could boost profits by almost double, making your new total nearly $1 million after 10 years.
Wow! At first glance, the difference really does seem big, doesn't it? But we shouldn't forget about the little details that come with running a business. The kind of roll-up-your-sleeves stuff mentioned in the video. When you run your own business, it demands all of your time. Stuff like taxes, salaries, insurance. Those responsibilities weigh heavy. Even something like a laundromat, which might sound simple, comes with constant costs. Machines break down, repairs pile up, and if you're renting the space, that monthly payment never disappears. On the flip side, investing in something like the S&P 500 works differently. Your money grows while you're free to earn elsewhere at the same time. That's an important factor the video didn't cover. And, honestly, when it comes to choosing, the key is focusing on what you actually enjoy doing. Because when you love it, the effort and the investment don't feel like a burden. They feel worth it. See you in the next episode, and remember, hamsters are power. One for all, and all for one. Hey, my dear investor hamsters, hunting for profits. Around here, we always say that when it comes to playing with financial tools, you've got to stay cautious. Many of you have probably heard about the stability of assets like the S&P 500. But is it really as safe and solid as people say? It's always smart to keep an eye on market trends and listen to what experts have to say. So today, let's do just that. Analyses like this are never wasted. Each one sharpens your understanding and instincts. So pause what you're doing for a moment and let's take a closer look at what might actually be worth your attention. Let's roll.
So buying the index fund is a way of diversifying in 500 different companies, but 38% of my money is in 10 different companies, and they're betting very heavily on AI. I feel like by virtue of having a lot of my money in the S&P 500, I am now kind of betting on a big AI future, and that's not a future that I definitely think is going to happen.
This is very true. Back in the dot-com bubble era, 25% of the S&P 500 was made up from the top 10 companies. Today, that is 40%. So a lot of people do the math and they think, oh, wait a second, if it was 25 back then, and the dot-com bubble caused the entire economy to come crashing down, and it's 40% today, that means it's in the danger zone, which is possibly true, but on the flip side, the companies today, they make a lot of money.
Pretty sharp analysis, right? At the same time, it's not without a bit of optimism. The volatility is obvious, sure, but I don't see anyone rushing to dump their S&P 500 holdings just yet. Then again, if people do start panicking tomorrow, it'll probably already be too late to sell. The truth is, investments like these depend on a lot of factors, mainly on what kind of player you are. Are you chasing short-term gains or building a long-term safety net to sleep well at night? Whatever your strategy is, always keep that emergency cushion ready and make sure to get advice from experts you trust. Catch you in the next episode. And remember, Hamsters are power. One for all and all for one.